Inflation, trade wars, and supply chain disruptions feel like random modern crises. But viewed through the lens of history, these are the predictable symptoms of a global power structure reaching its breaking point. Historians and economists document a 250 to 400-year civilizational cycle. Empires rise, overextend, and eventually decline. This pattern has never been stopped in recorded history. Spain yielded to Britain, Britain yielded to America. Declining empires cannot halt their descent. This matters because the period between the old power and the new one is historically the most dangerous time to hold wealth. We are in the middle of that transition right now, and the data shows exactly where the gravity is shifting. The United States is currently displaying the 5 textbook symptoms of an empire at the end of its peak: a rapidly rising debt, extreme political polarization, widening wealth gaps, massive military overextension, and losing its competitive edge. This chart shows the primary driver of that decay. With a national debt crossing $39 trillion, the interest payments alone have reached $879 billion annually. For the first time, the cost of servicing the debt is higher than the entire U.S. defense budget. While the U.S. is entering its decline, Western Europe has already reached terminal status. The region's 350-year era of dominance is ending, with growth rates below 1% and an energy infrastructure that has failed to adapt to a post-Russian gas reality. The situation is so severe that Germany, historically the region's industrial engine, is now seeing growth forecasts fall below 1%. This mirrors the stagnation forcing Britain into an IMF bailout in the 1970s. Today, Germany and France are reportedly exploring those same support channels. Civilizations do not die from external conquest. They collapse when they lose the internal capacity to respond to basic structural and financial challenges. China's rise was the economic story of the last 30 years, but their trajectory has hit a wall. They are the first major power in this cycle to peak early and enter decline before ever reaching the top. This tracks their collapsing primary growth engine. Real estate was 25% of GDP, but with investment dropping 16%, wealth is disappearing, dragging growth toward 3%. While their state-directed investment and export dependency allowed rapid industrialization, it created a structural ceiling, preventing ultimate global dominance. Reaching 60% of the way to superpower status is a significant achievement, but it offers no protection if the foundational economic architecture is mathematically incapable of further expansion. Russia represents the opposite end of the curve. Their empire hit its absolute floor in 1991, and by the rules of civilizational cycles, they have spent the last 3 decades in a multi-generational rebuilding phase. Russia has insulated itself by leveraging massive reserves of critical materials the world's new energy economy needs, including titanium and the palladium seen here, allowing them to generate revenue entirely outside the Western financial system. This trendline highlights the world's only major ascending power. India is currently the fastest-growing major economy on Earth, expanding at 6.6%, more than triple the rate of the United States and Europe. India's strategic advantage is its refusal to be weaponized. By building a parallel financial architecture integrating with Russia, they have made their economy invisible to the surveillance and sanctions of the old unipolar order. True superpower immunity in this century requires having 0 dependencies that a rival can exploit. India is the only nation currently achieving that level of strategic autonomy. We are watching the unipolar, US-led world order dissolve into a multipolar system where power is shared between the global South and the emerging Eastern economies. This specific phase of the cycle, the transition between powers, is historically characterized by extreme volatility and the destruction of currencies that are backed only by government debt. In a world where debt is weaponized and payment systems are monitored, investors move toward assets that sit outside the centralized control of a declining empire. This is why the shift into physical gold, silver, and decentralized digital assets like Bitcoin is accelerating. They provide a parallel store of value that cannot be devalued or frozen by a failing reserve system. Investors who study these 400-year patterns use this knowledge to move wealth out of paper assets and into the real reserves that define the next era of global power.